Yo, what's up, everybody? We got a special swing trade room and market Monday today. Ramez is going to be leading the charge here. Let me make him. All right, Ramez, I made you host, brother. I'm going to let you take it away here. We are walking through our potential new house in Florida with the inspector and measuring all things out. So I'll be seeing you guys later today on the DMU. Ramez, can you hear me? Can you take it away, brother?
Hey, good morning. Thanks, Mark. Good luck with everything. The weather looks fabulous wherever
Oh
you're at.
man,
So,
yeah. Look at this. This is gorgeous. Look at this. Look at this place, real quick. Let me brag on this real fast. If I can, I don't know if I can turn this around. Here, look at that. Isn't that great? Beautiful area. I don't know if y'all can see that or not. It's gorgeous here. So fingers crossed. We'll see what happens, and I'll catch everybody else on the DMU. Love you guys. Ron, man, take it away.
all right, thanks. All right, let me go ahead and get this recording started. I know we're about 7 minutes early, so but let's go ahead and get started anyway. How's everybody doing? I'm doing well, Bert. How are you? Happy to hear that. Okay, can everybody see my screen? Glad you're doing well, Dan. Okay. All right. Um, First things first. We're going to review the S&P 500 and see what the overall market is doing. Yeah, there's a lot of uncertainty right now. And when there's uncertainty in the market, that usually means sell off. Not that we're going to necessarily keep going lower. I mean, if you look at the S&P right now, we are breaking some major levels. So for example, this level here at 6,700, we did break it and we went down. I am going to draw some other lines as well that might even help. We did break this upward trend line that we bounced off of on March 3rd, and we gapped lower. I think to get a better picture of this, actually, you may want to look at the ES. The ES presents a clearer picture, and let me tell you why. Um, or maybe even the NQ. Hold on. All right, so we had that look. The NQ went exactly to, yeah, here we go. 24,000 even is where the NQ went. And retesting this support zone right here, right? And notice when price came down into this box, buyers are stepping back in, right? Does it mean we start rallying and going higher? No. We are respecting this downward trend line right here that has been acting as resistance, right? Resistance, 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 right? Um, but we are in this area of potential support. So the question is, do buyers defend this zone right here around 24,000 plus and go right back up? Problem is, if we go right back up, we are running into resistance. So do we go back up and roll over? Do we just fail where we're at and continue going down? Do we go up, retest this resistance, break out, have a break back up? I don't know. Um, we'll definitely be keeping an eye on it. That's for sure. But going back to the S&P, we go to the monthly. We did break down December's low, right? Um, and this is starting to look like we're breaking this bullish structure and starting to roll over on a monthly. On the weekly, same sort of thing. We've had this nice bullish move up, and now we had this candle that just opened underneath it. So I think we need a couple more days to see what we're going to do and if we're going to roll over or if we're going to go back up to resistance. So the reason why I showed you guys futures version of this is sometimes you get an easier picture with futures, seeing that they're traded 23 hours in a day, 6 days a week. Um, it might be easier to see that without the gaps, right? But anyway, any questions on sort of where
Knock it
we're at?
off, Oscar.
Any questions where we're at right now as far as the S&P and the Nasdaq? Guess we could take a look at the Nasdaq as well. Right now, we are coming into this support level here on the Nasdaq. So even though things are selling off, we could see potential buyers step in right where we're at. So, good morning, Ryan. Good to see you. All right. Any questions before I move forward? Good morning, Dale. All right. Thumbs up from Audrey. Great. All right. So let's first and foremost, let's review our current trades that we're in. So Fortinet is doing just fine. I like the fact that this stock is still going up despite the sell-off that's happening in the rest of the market. Jim, you weren't late to the room. We started a little bit early today just because Mark had to announce us, and we're live on YouTube. So fun stuff today. So no worries there. All right. So as far as Fortinet's concerned, I believe we hit first target and second target. So at this point, you guys, if you're still in this trade, you should have been moving up your stop losses. And we're looking to see if we can go back all the way up to this $88 range. I think this trade is pretty straightforward at this point. Any questions on Fortinet before we move forward? Okay, thumbs up from Dell. Great. All right. All right, let's look at the next one. IGV is the next one. So we already hit first target right here at 87.11. At this point, I'll be moving up my stops. Your next target's probably going to be around $90 if you're still in this. And then your potentially final target on this, if you still have a position left, would be around $93 to $94, which is right here before this gap. 94.50 probably would be your next target after that. Any questions on this one? Okay. And then IWM. Did any of you guys take a short position on this on Thursday? Okay, Richard said no. Okay. No one took it. All right. Um, all right, well, it worked. So oh, that's nice. Well, what type of options did you take on this one? You just bought a put. Okay, cool. Yeah, at this point, your put should be very much in the money and very profitable. I would probably be taking profits at this point because you also hit your bigger target. Um, if you look at this level right here, that's exactly where sellers got it down. You could see this as potential support. You're seeing the bounce now. So I would be out of this trade at this point if I were you. So good job. Good job on that one. Hey, you're welcome. All right, if you guys have any stock tickers you want to take a look at, let me know while I load up Mark's new watch list real quick. Give me a second. Okay, I'm noticing the tickers coming in. That's great. Just let me download this new watch list. Okay, let's take a look at some of the tickers you want me to go over. AUR, let's look at that one. Aurora Innovation. Okay. All right, right off the bat, um, this level right here is an important level. It was resistance back here in 2023, and then potentially could be support right here. This is another level right here. You see it acted as resistance, support all throughout this range of candles, resistance here and resistance here. So we'll have to keep an eye out on that level. probably around this level too, right here. $8 is probably going to be your next zone. And then I would imagine $10 would be a major level just because it's a nice round number, psychological number. Um, okay. Could I share the new watch list? Of course. Of course. Let me put it in the chat. You're welcome. Okay, so this one. Um, we kind of have this little cluster here that is potential resistance. We have this cluster down here that is support. And so if I want to take a trade on this, I needed to come down to this zone, retest this area here, and get a bounce up. And then my stop loss would be somewhere down here, and my first target would be right around this zone up here at 460. As of right now, it's sort of in the middle of the range. So I really wanted to come down to one type, one side of the range or the other. There is another scenario too where it could just never come back down here. It could just go up, retest all of these highs, break them, come back down. We get a trigger to go higher and retest this area up here. We can also get it to come back up, retest this resistance level, and have it fail back down. So those are the three scenarios. Patricia, I will check out Raytheon for you as well. Thank you for letting me know. All right, so does that make sense? Yeah, Bert, you were the one who asked about this. So those are your three scenarios. So what I would do is I would put an alert when we come back down into this zone right here around 379-ish. Let me know. And that way I can keep an eye on it without having to stare at this thing every day, right? So I have an alert down there, and I'm probably going to have an alert up here. I would imagine $5 would be a very strong level of resistance. So I would probably keep an eye on it on here as well. And those are the two alerts I would be setting on this. So it could be channeling down here, or it could be slightly channeling with sort of an upward, slight upward trajectory. It really just depends on if we can break this $5 level up here in order for us to go higher. Otherwise, the way it looks at right now is it's kind of a head and shoulders. So I don't know if you guys can see it or not. You have the shoulder, the head, the shoulder, and it may work its way back down into support. This is kind of a weird head and shoulders, though. It's not quite textbook, because if it was textbook, these candles would be around the same level as these candles. But rarely do you ever get textbook setups in real life. You just have to work with what the information is telling you and make the best educated decision moving forward. All right, any questions on this one? Okay, cool. All right, NOW. ServiceNow. Okay. I used to trade service now back here for an old line ad back in the day. Is it forming a W pattern since January 2026? If so, is that considered a bullish pattern? W patterns are bullish and M patterns are bearish, Kumar. So I don't know if I could see it. I'm on the weekly right now, um, but I don't put a lot of weight into that. I still want to mark my levels and see where we're potentially bouncing off of, right? Like why are we bouncing off this area? Just real quick, why do you guys think we're bouncing off this level right here? See if you're trading intuition. Yeah, that it is a level of support, but why do you think it's a level of support? What's magical about this area down here? Yes, a nice round number. It's 100. 100. Isn't that amazing? Right around 100. It went a little bit below it, but notice we never closed underneath 100. This candle, as bearish as it was, closed above 100. This closed above 100. This closed above 100. This closed above 100. So when buyers start seeing that, buyers are defending 100, more buyers potentially could be stepping in, right? This is why I like to mark some of my nice round numbers like 100, 150, 200. These are all going to be potentially major areas, right? Um, I'm trying to see what else we got going on here. Yeah, Jim, I use that every day in my day trading. When I'm trading the ES, the 50 levels and the 100 levels play a factor in my decision making. And then, because they're psychological levels. And then when I'm trading the NQ, the 100 levels, sometimes the 50 levels will play a factor. So, um, we have this sort of zone of support down here. And again, it's around this 100 area, but this is monthly level. Let's see if we can get a clear picture on the weeklies. Question is, why is my weekly only going back this far? It said it's supposed to go back 10 years, yet it's only going back, here we go, 10 years. This isn't 10 years worth of data. Is it because I'm zoomed in? That's what it is. Okay. I feel a little silly now. All right, so let's just go ahead and mark the 100 level. We know that's going to be, and you can go in here and edit it in case it's not perfect and actually type in the number 100. We'll call that a monthly level. And we'll make it pink. Let's identify our other levels. We have this cluster here, and this cluster here, and this cluster here. So that's our next sort of zone, weekly zone. Right there. Resistance, resistance, support, same level, resistance, resistance. And then here it just kind of went right through it. So question is, does it come down to this 119, 120 level and bounce back up? I don't know. We'll have to keep an eye on it. Um, See if there's any other levels I need to be paying attention to. probably this level. And it's not a perfect science, by the way, guys. Sometimes it's just identifying zones 135-ish. Let's see. Jim, that's a really funny comment. Yes, 135 probably should be a level, seeing that it was prior low down here. Good eye. Good eye. All right. So we have those weekly levels marked out. Um, the next thing I would do is I'd start drawing my trend lines and I just connect them like this, and notice this kind of broke it. Mark likes to keep those trend lines that have been broken sometimes because sometimes they're just a little bit of irregularities. And you could see that in this particular case, it got retested here and failed. So, oops, I did not mean to delete that, but here it is. And you extend it to the right. And then I will start drawing these upward trend lines here at our support level. So now the question becomes, what do we do? Because we're kind of in no man's land. We could continue rallying and retesting this 135 level that Jim pointed out, which is a weekly level, and then we can fail. Um, Problem is, you really can't get into it right now anyway, because where would your stop loss be? Stop loss would be somewhere down here, or somewhere down here, or all the way down here. And so you really need it to pull back down into this potential area of support, and we get this bounce up. I know you guys are going to hear me say that like so many times. The other scenario, if we really want to go bullish, is we go break this 135 area up there and then retest it and get the bounce up. In the meantime, it's going to be a waiting game until we see what it wants to do. Because as of right now, like, you're risking 20% to make 11%. That's not what you want to be doing really ever. So, um, I like ServiceNow. I think they're a great company. I just think we need to wait for a pullback. Any questions on ServiceNow? There is another scenario too, Kumar. It could, seeing that this was a prior high here, we're probably just trying to fill the gap as well. You might see a potential pullback into this sort of zone here and then a bounce up. You can then use this pivot if it forms as your stop loss for a move up to test 135. That could be the next potential scenario. But I would like to see it pull back and go up. So in that case, you're looking at potentially, risking like 3% to make 5% to this previous high, 4% to this previous high, and seeing if it wants to go all the way up here and making about 11%. That's what it would look like to me if it wants to maintain its bullish structure. Okay, you're welcome. Um, let's look at the next one. UCO. Crude oil. Well, yeah, oil is going to be oil is going to be off the charts right now. If you compare that with actual crude futures, yeah, they should be very, 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 very similar. Um, all right, let's go back to yours actually. All right, let's go to the weekly, monthly. Wow, this thing has been. I want to understand how this went from $35 down here to at one point trading in the thousands. I don't know too much about this ticker. Let me see. Fundamentals. The fund uses derivatives such as future contracts to invest in WTI sweet light crude oil. It seeks to track 2 times the daily performance. Interesting. Well, we have this high here. We have these lows down here. I almost have to draw it at the weekly level because if you look at it on the daily level, there's too many gaps. And it's because it's tracking something that's being traded almost 24 hours a day because it's tracking futures. Um, and so with that in mind, I think this is going to be a really hard instrument to trade because of how gappy it is. I don't even know if that's a word. Is gappy a word? Gappy. I don't know. It is now? Okay. All right. Have them put it in the financial dictionary. They'll teach it at universities starting now. Gappy. All right. I think in essence, if you probably want to participate in oil in some shape or form, you could look at the corresponding gas stations as well, like Exxon, BP. Um, what are some of the other ones we actually trade? Hold on. So what is Exxon Mobil? XOM. Valero, okay. Oxy, yeah. Yeah, yeah, yeah. So I would probably take a look at those because those are going to be more liquid and they're easier to trade than the other one. I mean, let's take a look at Valero and Oxy real quick, just since we're yeah, Valero Energy. Yeah, Valero Energy's now this one's pretty straightforward, like on how you would trade this one. You wanted to come back down to 200, a nice even number. This is where all this support is waiting for you. And then you would trade it on the way back up. That one seems very straightforward to me. Um, and then you have Oxy. You'll notice a lot of these patterns are going to be similar in nature, just this sort of hold and go just because of the war. Um, Same thing with this. This is your support level. You want it to come back down and go up. Problem is, I mean, I don't know if we're gonna get like an actual regular pattern when it comes to these, just because of the uncertainty of the wartime. Um, so having it having a predictable tradable pattern may not be something we get when it comes to this industry. Similar look here too. So you have this upward trend line. Did not mean to extend it that cancel the I wanted to extend it to the right. And then we have this sort of level of support down here. Like I really wanted to come back down and go up. The problem is, and this is more of a like a practical problem, not so much as a trading problem, is if we trade this thing and it goes up, sure, we might be happy if we're in the trade, but we're also our filling up the tank pockets is going to be sad, right? So you're make you I guess that's one way you could afford to fill up your tanks is if you make money off the stock market, right? You can profit off the stock price and have that be the profit you use to fill up your tank. Because right now, I mean, it sucks for us. It costs me around $75 to fill up my tank before and then this was a few weeks ago. I don't even know what it is now. Um, and I'm sure different people have different price levels depending on where they live in the country as well, right? So anyway, let's go back to, yeah, for sure. I see Jim's comment. I mean, I think this is a highly volatile industry at the moment. I mean, speaking of volatility, I think we should have probably taken a look at the VIX. The VIX this morning did spike up and then just drop down. Um, we haven't hit levels this high since November and October. And then this is when we had all those tariff news last year, and the VIX was like really super high. I think I marked the heck out of this, but I probably should be redoing my trend my levels here on the VIX. But typically, are you guys familiar with Warren Buffett's saying, be fearful when others are greedy and be greedy when others are fearful? Are you guys familiar with that saying? Yep. Everybody's giving me thumbs up. Yep. Well, VIX measuring volatility is also known as the fear index. So when fear is high, you should be looking for opportunities to get to be greedy, I guess. But this is why we're here, I suppose. We're looking for those opportunities, but with careful risk management, of course. I'm not telling you guys to go out there and go crazy just because the fear index is high. It could obviously keep going higher, right? But the fact that you see this open and drop here is telling me that a lot of the fear is starting to subside. And I don't know. We are back in this sort of area here, which is high as well. See, the opposite is also true. When fear is at an all-time low, this is when you start getting sell-offs. When fears gets higher, you might start seeing some bullish activity. And so it's a very good idea to keep an eye on the VIX when you're making decisions and trading. And you have this support level here. It's crazy. And if you guys are wondering, can you trade the VIX? You can actually trade the VIX in terms of options. You can't buy, I don't think you can buy shares of the VIX, can you? No, you can't. You can only trade options on the VIX. I've traded the VIX before actually. If I know that we're going to get a spike in volatility, I would trade the VIX. But There seems to be a lot of fear in the markets right now. During February of 2022, Russia-Ukraine war, oil moved above $100 per barrel, and several energy and defense stocks gained $5 to $7 overnight. And that was my observation. If tensions with Iran continue and oil, which touched around $116 last night, keep rising, could we see a similar reaction again? What are your thoughts? I mean, history tends to repeat itself, Kumar, but just because that happened, um, I mean, if we go back to 2022, um, so let's go look back at 2022. We were at all-time highs starting the beginning of the market. And I don't know if you guys remember, Mark talked about this in several of his presentations about how the Fed said that due to their conflict of interest, they are going to get rid of all of their positions so that they won't be trading the stock market anymore. And, are they really doing that because of their moral compass and the kindness of their own hearts? Highly doubt it. Highly doubt it. We were at the top. And so you almost got this perfect storm with Russia and Ukraine, and the fact that we were at all-time highs dropped the market lower. And right now, we're not really at all-time highs. We were earlier, right? Back in January. But look at the difference between the two. Um, when we started dropping, and I even had this channel that I drew here. You guys could see it from way back in the day. This downtrending channel. Um, we at least had structure. Like it would go up, down, lower high, lower low, lower high, lower low, lower high, lower low, lower high, right? And then finally we started transitioning back up, right? And I think the rally towards the end of the year here was the AI boom. We started seeing AI companies, Microsoft, Nvidia, and all those guys started rallying back up, and that's what propped the markets higher. The problem with our current structure is that it's not really. It's still technically speaking, our structure is still bullish, right? How do I know? How do I know that the market is still in a bullish structure, guys? Yeah, we have higher highs and higher lows. We have yet to take out our weekly low. Our weekly low is down here. This guy. Let me move it. So, and you could see here we're holding this upward trend line. Now, granted, today, this week, we're down here. But if we take out this weekly level, which is 6,500-ish, notice it's another round number, around 6,500. If we take it out and close underneath it, then we might be in potential transition on the weekly to go down. On the daily, we have transitioned lower because this was our last high and this was our last swing low, and we've since broke that low here on February the 5th, and we broke it again here on February the 17th, and we broke it again here on March 3rd, and obviously yesterday, Friday, and today, right? It definitely broke this low. So you're starting to see a little bit of that rolling over on the daily, but on the weekly, it still looks bullish. if I put in the EMAs, we're bouncing off of the what moving average is this one? This one's the 34 EMA. We're still above the 34 EMA on the weekly. Whereas if we go to the daily, oops. We're underneath all the EMAs here, except this very, very, very important EMA. This one right here is the 200. The 200 EMA is more for super long-term, um, what word am I looking for? Trend. Okay. So we're still above it here. And if we go to the monthly and I put in my EMAs here, we're we're basically above the 8 EMA still on the monthly. So I guess sometimes what I'm ultimately trying to say is if you want to gain perspective, especially in the market, there's going to be a lot more noise in the lower time frames. And sometimes you have to zoom out to get that perspective, to get this bigger perspective. And I would say that's probably a metaphor for life as well. Um, sometimes if you're stuck in the weeds of day-to-day things and you need to make some big time decisions on certain things in your life, you probably have to zoom out and get a heavenly perspective on things, right? So I think there's not trying to get too philosophical here, but I do think the markets and everyday life are related. So it's a lot of wisdom in that, I suppose. So to answer all of your questions, guys, about oil and everything else, yes, there's a ton of things that are at play. There's a lot of news, there's a lot of uncertainty, there's a lot of things that could happen that could completely break patterns of the market and things like that. We're just going to do our best to mark the levels that we know and see if there's opportunities that make sense in the industries that are doing well. And for the industries that are not doing well, can we take advantage of some short positions? If the patterns are there, if it makes sense. Like, am I telling you guys to go out here and short the S&P? No, I'm not. I think the S&P this year, ultimately, what I am trying to say is has been really tricky. This has been a really tricky year when it comes to the S&P and the Nasdaq. But I I think we just make the best decisions we know how in the industries that are doing well. So I hope that answers some of your questions. I know there's some other tickers. I'm scrolling up to see what other ones I might have missed. I know there was Raytheon from Patricia. And, Raytheon might actually be a good example. They are a defense contractor, so they might be benefiting from. Wait, is RTX Corp Raytheon? Is that Raytheon? Would you look at that? They're close to where I live. All right. Okay, this one actually operates through three segments, Raytheon being one of them, Pratt and Whitney, and all right. Now, obviously, they're out in Arlington, Virginia, and you guys know why they would be located there? Because that's where the Pentagon is located in Arlington, Virginia, in case people didn't know that. It's not actually in Washington, D.C. All right, so Raytheon, let's take a look. You know, I used to trade RTX when it was just Raytheon, but I believe maybe this merger happened recently. I don't know when because I was trading them back here um, when I was actually first joined Neos, believe it or not, and I was a consultant, and some of my colleagues on the project that I was on worked for Raytheon. So a lot of history here for me personally, but all right. We had this uptrend. It kind of broke down, but it kind of held this level of support. So your new upward trend line is going to look like this. Going to the weekly level, this is, I'm only going to mark the more immediate levels. Um, this would have been the nice area to get into it here. This would have been your stop loss, and this would have been your first target. Um, are we running up into anything? Are we in all-time high territory? We are in all-time high territory. Okay. Well, the other thing I'm seeing is this. It's a channel. And so because we're in this channel, guess what? Guess what I want us to do, guys? I'll give you a guess. How do you switch to the different time frames on Toss? I can't find that function. Deborah, why don't you send me an email and I will set up a quick call with you and help you get that set up. I'm going to put my email in the chat. Okay. All right. Yep. I wanted to pull back. I do. I do want Raytheon to pull back down to this area and get the bounce back up and ride this channel. That's what I want Raytheon to do. Um, just seeing 4% to make 2.85%. It doesn't make sense yet. That's why we need that deeper pullback. So what I would do, Patricia, 200 is going to be that nice even number, right? Right there. 200 is also going to be right around where we go underneath it, get the bounce up. If we get the bounce up above 200 and that's our signal, that could be your go signal to go higher, and your stop loss would be underneath this pivot here. And so at that point, you'd probably be looking at risking something along the lines of like 2.3% to make, you know, almost 6% or above 6%. So that's how I would trade it. Um, I would put an alert right around here or maybe down here. See what it wants to do. Surprised Booz Allen's not doing well. They're also a defense contractor, public sector. All right. Raytheon, I think I saw another ticker from David. There we go. OKE. All right, OKE. We talked about OKE, I think maybe last week or the week before. And we wanted to see that pullback, and then we would have gotten in, and your first target was right here. I don't know if we would have if we ever got the pullback. Yeah, I don't know if we ever had a chance to be able to take advantage of this, because this is right around where you got the trigger to get in, or even, and at that point you'd be risking, it's almost a 1-to-1 trade. So you'd be risking 5.43% to make 5.46%, almost a 1-to-1. Um, I really like this pattern because we were holding this upward trend line. You could see here, it went up, came into it, came into the trend lines twice, came back down, bounced up. So at this point, guess what you guys I hope I'm really drilling this in everybody's heads. Guess what I want to see this stock do? I wanted to come back down into this trend line, and then we move up. Um Jim's laughing. Yeah. I mean, it's the ideal situation. Do we get that? Maybe. Um, but so at this point, I would probably want to see it come back down here to this 50% retracement. So I'll put my alert down at 84.34 and just want to see what it wants to do at this point. Any questions on this one? All right. Thumbs up, thumbs up. I'm trying to see if there's any other tickers that you guys left in the chat. Yeah, I mean, it's sad that we live in a world where a tweet can move the market sometimes, but alas, we're here. We did not take a look at Netflix, but for you, Howie, I will take a look at it for you. Dell, I think Mark is still working on that with NinjaTrader. All right. So you guys know we've been talking about these nice round numbers. We talked about 100 as being support. What is 100 doing here? Acting as resistance. Yep. So at this point, I think if I remember correctly, Howie, you bought a leap on this one, right? Yeah, you can do a poor man's covered call. Do you know how to do that? Maybe you should YouTube how to do a poor man's covered call, but you can do a poor man's covered call on this. Mark doesn't really teach this, but essentially, um, you can buy a call that has a lot of time. So in Howie's case, um, I think, when does your option expire, Howie? Like a year from now? When did you get? Because she bought a leap option. Okay, so a little under a year from now, right? So she bought a call, and normally when you do cover calls, you need to own 100 shares of the stock to do one covered call. And actually, that's what most of the institutions end up doing. Most institutions, because they own thousands, if not millions of shares of whatever underlying stock we're talking about, they can afford to write options. So when I say they're writing a call, they're the ones selling a call. And when you sell a call, you want it to go down. Or when you sell a call, you're looking to minimize your upside risk. So for folks who have long-term investments and they do own hundreds of shares of a particular stock and they want to keep holding it for the long haul, this is where cover calls would come in. You can write calls against it. You can collect premium. And if the stock goes sideways or underneath the call that you sold, you get to keep 100% of the profits. Um, Now we go over covered calls. I think Mark has a cover call class, but it was something that he covered, no pun intended, in the um, in-person conference. They are an advanced strategy, but a poor man's covered call is when instead of owning 100 shares of a stock, you buy a regular call that's further out in time, and then you can sell a call that's closer in time and you'll collect premium for that. And if it doesn't quite hit its target bullish, you keep 100% of the premium of the call that you sold closer to the present. If for whatever reason it keeps going higher, let's just say in this example, Howie decided to sell a call at 100. So she's saying, I don't want it to go above 100. I want it to go below. But she also has a call, a leap option where she wants it to go up. She at this point she would be minimizing her downside risk, and she could then sell multiple calls over a period of time if she never gets called out. And what I mean call out is if price closes above 100 by expiration on the call that she sold, she's not going to be in trouble because she gets to keep 100% of the premium she did collect, but then she's going to get her other option exercised to compensate. And she'll end up making a profit. It's a very complex thing. There's a lot of nuance to it. I can give you guys a great analogy that can actually explain it. Imagine you guys are running an ice cream business, okay? So like you're Ben and Jerry's or you're a mom and pop shop and you're selling ice cream. Well, you're going to either make the ice cream yourself or let's just say you buy it from a third company and you're buying these huge barrels of different flavors, right? So chocolate, vanilla, pistachio, cookie dough, whatever, right? And the idea here is you buy this big bucket of ice cream, but you sell portions of it in pints or in cones or whatever denomination makes sense for people who are coming in who are your customers. And so a poor man's covered call is exactly that. The big call that you buy in that's way further out in time, that is the big bucket of ice cream. The shorter, smaller in time calls that you sell are the smaller pints of ice cream that you're selling. And the idea here is can you sell calls that are further out in the money and keep selling these calls and keep the pint of or keep the bucket of ice cream safe and keep collecting premium off of the pints of ice cream that you're selling? That's the idea behind poor man's covered calls. Now, if you do a poor man's covered call and the expiration dates are exactly the same, well, guess what? You guys just got into a debit spread. It's just a debit spread. But when the expirations start being different, they're also called calendars and diagonals. And those are very, very, very advanced strategies that we haven't really taught at Neos yet, but I think eventually Mark may want to teach on that. Anyway, I think I went very, very complex with this information, but I try to give you guys a little bit of something to chew on. In this case, the thing that you're chewing on is ice cream. And maybe hopefully I mentioned one of your favorite flavors. I don't know. Maybe you guys can let me know what some of your favorite flavors of ice cream. Personally, for me, I love a good coffee ice cream, like a Haagen-Dazs, or I do like coffee buzz. I can get that from like 7-Eleven or something. But Mandel says Schwab has great videos about all the options. They do. Question is, they'll tell you how to set them up. Question is, what is the optimal way of setting them up? And what do you want? What are you looking for? Well, that's where these courses come in, right? That Neo sells. Brain freeze. That's funny, Russell. Um, cool. Okay. Um, any more questions or stock tickers? I know we have about a minute left, but this was a really fun session today. I won't lie to you guys. Jim says I'm still crawling through things. Hope to walk soon and run later. Of course, I don't mean to I don't mean to overwhelm people with any of this. Honestly, at the end of the day, learning price flow, price structure, the stuff you learn in zero to trading is fundamental to any strategy you do in the future. So, yeah, I'm still calling. That's okay. That's fine. At least you're moving, right? At least you are moving. You guys being part of this community, um, taking steps forward, whether it's a crawl or a walk or a run or a jump or whatever, um, means you're at least moving and you're in motion. Whereas, unfortunately, a lot of people have not made that decision to get educated and to move forward, right? So, lots of notes during trade rooms for me means a good session. Great SPX analysis, Ramas. You guys are welcome. Yeah. Yeah, it's really awesome. I'm actually going to be back tomorrow and Wednesday. So if there's anything else, we can certainly bring it up then. But as always, super awesome to see you guys. You guys are most welcome. And I'll see you guys here tomorrow. Okay. All right. Have a great one. And God bless.